September. It's notorious for being the worst month of the year for stocks, and now investors are bracing for a perfect storm of political and economic events that could do serious damage to your portfolio. Joining me now with money moves to make in September, Larry Shover, Chief Investment Officer at Solution Funds Group, David McIlvaney, CEO of McIlvaney Financial Group, and Alan Haft, author of You Can Never Be Too Rich. Welcome all. All right, Larry, I'm going to start with you, my friend. Are you worried about September? Should I be worried about September?
No, I'm not worried about September whatsoever. I mean, it is true. We have the Congress coming back. There's a lot of fighting that's going to happen with the budget and deficit, taking up a lot of oxygen. But the bottom line is coast is clear investing. Armageddon investing never makes sense. We need to stay the course and not worry. You have to remember, this is kind of baked into the markets right now. But
the last time we had this big debate, David McIlvaney, the last time we had this big debate over money in Washington, stocks went through the floor. Is that going to happen again?
Well, I think there's a number of other factors that you have to look at. The market internals, whether it's breadth, volume, the number of stocks that are trading above or below their 50-day moving average. The internals of the market are rotten right now. And we've had margin debt, which reached its peak in April, which has actually been in decline since May. And I think if we are looking at sort of the market language, it's already telling us that whether it's September, October, November, we're in a period of extreme peril. I would be very cautious, and I'd have to disagree strongly.
What kind of correction are you looking for, David? How much?
I think a 20% correction would be normal at this point, and there's about a 25% chance of it being as much as 30 or 40%. So 12,500 on the Dow. I don't know that we'll breach 10,000, but 12,500 would not come as a surprise. Keep in mind how dependent these markets are on speech from the Fed.
Alan, does David have it right?
Oh boy, no. I'll be the smartest guy in the room, Jerry, by saying it's impossible to predict this, because you ask three financial guys what they think is going to happen in the markets in September, you're going to get 5 different opinions. So I think the question that people need to ask themselves is, are you a trader or are you an investor? If you're a trader, good luck trying to time the markets. If you're an investor, you should be in a good portfolio of non-correlated assets, knowing that some things are going to go up, some things are going to go down, and don't ever try to time the market, because that's a loser's game.
You know, I got to tell you, I've watched the growth all year, right? And I'm talking about EPS growth, GDP growth. Larry, to you, it's not impressive at this point. I don't know what's holding this market up other than Ben Bernanke. Is there anything to look forward to here?
Well, I think there's a lot holding it up right now. It seems like, first of all, we all need some type of impetus for the market to go forward. That's not really true right now. I mean, we've had macro calm around the world since July. That's holding the market up. We've had balance sheets that are strong, valuations that are okay, multiples that are okay, and we have accommodative central banks around the world. So, yeah, can we have a downdraft? Can we correct by 5%? Sure, why not? Momentum could take us there. But overall, we still are going to march higher. I mean, I don't think sentiment is bullish enough for us to have a big correction.
Okay, you know, Fed is meeting September 18th. It's coming up. It's on the calendar. They're definitely going to start talking, David, about possibly reducing what they've been involved in for months and months and months, propping up this economy. What do you think they'll do in September? Are they going to pull in the rope? Or are they going to pull the rug out from under the economy?
You know, they can do anything. The challenge is dealing with the ramifications of what they choose. And if they do decide to taper or pull back, you're going to see a rise in rates and a drop in equities. A rise in rates are going to have a major impact on housing, and that's just in sort of a fledgling recovery at this point. So I think there's a lot to lose for them to pull back. I think they've used language at this point to posture, but they haven't taken any actions as of yet. And I'm not sure that they will take any major actions, given the fact that they've got the baton to pass from one leader to the next.
That's right.
And I don't know that they want to roil the markets in the context of this passing of leadership.
Well, and speaking of passing of the leadership, take a look at who might be replacing Ben Bernanke. It could be Larry Summers. Lots of stories written about him recently. Janet Yellen, Donald Cohen. There's a mystery candidate out there. Alan, to you, who would be best for my pocketbook? Who should I be cheering for in this race to lead the Federal Reserve?
You know, Jerry, I can start taking votes out there of who I think would be best, but it's really tough to say, because the person they put in place, nobody really has any idea what that person's going to direct for the reserve and how fast they ease up. And to the point that we've been making, if whoever that person is does announce that maybe easing is going to take place a little faster than everybody expects, and the market gets rattled for it, bring it on, because I'm going right in there and buying whatever I can on sale when everybody else is running for the hills.
I like that attitude. Buy on the dips, take advantage of the opportunities that are presented to you. Larry, to you, so let's see, we're going to have the Federal Reserve is going to do their thing in September. We've got the fight over the budget. Goodness knows what, is going to happen to our credit rating through all of this. It seems to me this is like a perfect storm of bad news for the markets. Do you think, because we've been through this series, we've trotted out these stories over and over again, that the market will just shrug its shoulders and move along, or will we see a lot of downside action in the markets come this fall?
Again, I think we're just going to see a lot of consolidation and digestion. I mean, these are all things that are known in the market. And the old adage is that you sell the knowns. We all know what's going to happen here. I mean, not exactly, but we know that the budget's going to be a crisis. We know there's going to be last-minute mudslinging and all that sort of thing. We have Janet Yellen, Summers, whoever. The fact is we need to stay the course. It's the things that we don't know that are going to hurt us. It's not the things that we know.
Well, we know a lot of bad things already. Larry, David, and Alan, thanks for coming on. You guys were great. Good stuff. Interesting discussion. I love it when people disagree.